Good afternoon, ladies and gentlemen, and welcome back. I'm your friendly neighborhood PM here to give you your top 3 market points of the week. Now, there's been a lot of news and a lot of things happening this week, so without further ado, let's dive right in. At point number 3, it was Tesla reaffirming Elon Musk's $56 billion option pay program. Now, for those of you that don't know, in 2018, Tesla came to the agreement to pay Elon Musk $56 billion in stock options via meeting various performance obligations. That since got blocked recently by a Delaware judge. Now, recently, shareholders voted essentially as a vote of confidence to award Elon these stock options while also legally moving Tesla's domicile from Delaware to Texas. Now, this was not a legally binding vote, and that doesn't mean he's necessarily going to get paid out these options. But what it does mean is that shareholders have more confidence in Elon's leadership. Now, the Delaware court still needs to approve these stock options via appeal, and if that doesn't happen, the company is thinking that Texas and their new business courts may be a little bit more lenient. At point number 2, it is Adobe smashing earnings and raising forward guidance. Right now, we're seeing Adobe up over 14% right now today, so they pretty much beat across the board very strong, while also reiterating that they are seeing strong user growth and renewals of their contracts via AI demand through their own proprietary AI model, Firefly, which is software to be used in Photoshop and Illustrator. So they're seeing a wide adoption of that, and they continue to see monetization of their AI implementation. So the stock is really taking off today. And then finally, number 1, and what's kind of been driving the overall economy for quite some time now, it was inflation data. So we saw CPI, core and headline both moderate over this past month of May. Now, a lot of the main drivers of those price declines for core CPI was thanks to declines in airfare, car insurance, and even clothing and apparel. So this was a very optimistic reading on inflation and really helps to reignite the hopes of rate cuts later on in the year by the Fed. We're starting to see a full cut priced in November. Now, the Fed has been very adamant, and they continue to be so, that they want to see consistent data progression on inflation moderation month over month before they even discuss trying to implement any cuts. So we're going to keep watching that data month over month and relay that back to you here. Now, that pretty much does it for this week. What are we looking to for next week? Well, next week, it's going to be primarily housing data, housing starts, building permits, mortgage applications, the whole shebang, just like always. So we'll keep you updated on that next week as well. Now, that pretty much does it for both next week and this week. As always, if you have additional questions, please reach out to your financial advisor or dig into the written week in review. And other than that, go enjoy your weekend. We'll see you at the same time next week. Thanks again. Bye.